Let's get some more on what all of that means for the local market open. Evan Lucas joining us from IG in Melbourne. Evan, great to see you as always. Just firstly, this idea that stimulus is coming from the ECB and the PBoC, I mean, how much of that do you believe?
Again, probably looking at the ECB, listening to what Mario Draghi said last night, it is certainly on the cards in terms of him holding rates where they are. He's always been about the idea that maybe we need to sort of really move on rates, to even possibly into negative area, trying to force money out of the current situation where you can loan into the ECB and get a very nice little tidy return. So he is trying to continue to stimulate from there. The other thing that he's got a headache on is the fact that the euro remains well and truly above a level where they see that as comfortable. So at around about 138, which is currently sitting, is a cent above where you saw Spain, Italy, France, all of those major sort of countries, their prime ministers and presidents were all complaining about the fact that at that rate they are uncompetitive, and that's certainly one area that he's got a headache. So you would suggest that he is going to have to address the whole Eurozone possible deflation issue there, and therefore means that he will have to either stimulate in some shape or form. So his comments last night that they are certainly seeing that as the case, that the accommodative stance in monetary policy will remain for a fair while to come, and that they are ready to do that further, is certainly a help. It's why you saw a bit of a shift off on the euro. It's why you saw particularly the CAC. But if you look at the IBEX and the MIB, they're the two on the periphery that really jumped up last night because of that idea. As you also alluded to, the PBoC is the other interesting one, and there's certainly market momentum behind the whole idea that stimulus is coming from China. We saw in the iron ore futures yesterday, they had their largest ever intraday rally, up 4% and a bit at the top of the market, finished off around about 3.5%, but that was doubling the previous record, and that's because all of a sudden there is a prospect that if you have a look at steel and forward steel movements, for those infrastructure projects they announced that they will actually bring forward, that is now starting to look like it's ramping up. So you can see stimulus is certainly coming. The markets are reacting to the idea that stimulus is certainly coming. And that's why at the end of yesterday you saw Asian markets really picking up, and then transferred into Europe as they saw that coming out of the ECB. And then you had a bit of a reversal finally from the US. So that's all very good market momentum for today's trade.
Just onto the commodities rally, I mean, do you think this is going to be sustained? Is it snapping out of the downtrend?
Again, I think you've got to look at copper there. There's a possibility. It certainly looked like a bullish reversal. Copper's been in a horrible trade lately. If you have a look at any sort of graph on copper, it has been almost basically like watching a cliff form, and that's certainly been the way that you've seen copper movement. The reason it started to pop is, again, gets back to those PBoC stimulus ideas. Copper is really basically almost the pure gauge of how the Chinese economy looks, because it is supposed to be that whole idea that you can see the domestic demand for the industrial metal picking up. It's been a little bit of disconnected, considering that there's also been that illumination of the fact that 60 to 80% possibly of copper sitting in Chinese ports is actually under collateral coverage as they make their loan sort of payments through that perspective. But that is a good thing to see. So there is finally a bit of a reversal there. As I said already, you saw iron ore futures and iron ore last night also starting to move higher. So at 111.8 US a tonne on the spot price of iron ore, that has finally sort of looks like it's starting to move higher after that really big slump we saw around about 2 weeks ago from 114 down to 104. So there is market momentum, there is certainly commodity momentum, and the other way to look at it is that gold, that safe haven asset play, is continuing to weaken off after having a 16.7% rally from the start of the year to March 17. That also means that investment risk is back on. They are looking at the US dollar, they are looking at US treasuries, and you can see that as well, that maybe the gold is finally breaking down as a store of value that it has been for that harsh winter, for the China issues, for the Crimean issues, and that we're actually seeing the metals that you want to see moving, so the industrial metals picking up. That is a positive sign.
So what does all of that mean for the open on the ASX 200 today?
Yeah, all of that means that we are going to have a good day. We're looking at the market up around about 21 to maybe 24 points, so 53.50, 53.55. Other clear sign that came out of yesterday's trade is what was, again, another hold of the support level at 53.10. So that is a really good thing to see. We did test it, we bounced away from it, and now it looks like we're going to move further and further away from that support level. So that does support the idea that strength is there in the local market, that the bulls do come in once you get to that 5300, 53.10 level, and today we should move away. Watching the material space yesterday, they did have a really nice reversal halfway through the day and jumped up. Watching BHP, they look like they will possibly go back towards the 36 dollar handle. So should be a positive day, Bridie, watching Asia particularly. But again, it's all about what's going on also with the Aussie dollar, and that remains fairly high. So watching what Glenn Stevens says at around about 5 p.m. Australian Eastern Daylight Saving Times as well.
All right, thank you so much for that.
Thanks, Bridie.
Evan Lucas there from IG. We'll be checking in with him a little later, of course, as the market opens.